Welcome back, everyone. This is Nick from Reventure Consulting, and today we're going to take a deep data dive into the Boston, Massachusetts real estate market. Now, I've been really excited and waiting to do this one. Boston is near and dear to my heart. I lived there for 8 years, all around the city, different neighborhoods like Somerville and Austin and Fenway in the South End. So I'm really familiar with the real estate market in the city from an on-the-ground perspective, and I'm really excited to apply data to it so that we can answer two fundamental questions. The first one is Boston a safe place to buy real estate right now? Do we feel like if we're going to buy right now, that our values are going to hold and that we're going to make money in the long run? Or do we feel like just now's not the right time? Maybe it's a bit overpriced. The second thing we're going to figure out is what are the best places to buy within Boston? So what are the neighborhoods and the zip codes that have had the most growth over the last 5 to 10 years? And what are the ones that we think are going to have the most growth over the next 5 to 10 years? So without further ado, let's get into it. So as I said, I lived in Boston for 8 years. That's where I, started working in real estate. That's where I learned everything I know about real estate. And I have a big affinity for the city. It's an amazing place. You can see the shirt I'm wearing today has lobsters on it. That's an ode to New England. And of course, all the tremendous seafood they have, the lobster rolls, all that. So I really like Boston. I'm really excited to get into this. So let's start tackling the first question. And that is Boston a safe place to invest? Now, the answer to that is complicated. And I'm sorry to give a wishy-washy answer, but it really just is. Because Boston has a couple things going on that make it look good and a couple things going on that make it look bad from a broader real estate perspective. Let's get into the good first. Boston does not build very many new homes. So, whereas a market like Austin, Texas here, or Phoenix, these are markets I've covered in previous videos, where they're building a lot of homes per year. So for instance, in 2020, Austin is permitted 21,000 new homes in its metro area for a 4% expansion of its housing stock. Whereas that's where Austin is. Boston has permitted 4,500 new homes across its metro area for a 0.4% expansion in its housing stock. So Austin is building 10 times more new homes than Boston. Why is that important? Well, the more new homes you build, you're increasing supply, right? And real estate price is all about the dynamics of supply and demand. So if you're increasing supply, in the long run, that's going to actually lower the kind of price growth and the amount that values can appreciate in the long run. So in Boston at 0.4%, you can see like for a long time, Boston just really hasn't permitted very many new homes. Boston will never run into an issue where it's oversupplied. And that's a great thing for owning real estate in the city. You don't need to worry about like all of a sudden this new home builder comes in and just like dumps 5,000 new homes next to your neighborhood. And then all of a sudden, your values stagnate because there's just all these homes sitting vacant for sale. That situation is never going to happen in Boston. However, on the negative side, there's one really concerning thing going on with Boston's economy right now, and that's just massive job losses in 2020. So Boston has lost nearly 10% of all its jobs across the metro in 2020. That's really high. And while some of that is obviously related to coronavirus, pandemic, and government restrictions, not all of it is, because Boston is like way worse than a lot of other cities that are subject to similar things. So on this graph, we're tracking the percentage change in employment across the 100 largest metro areas in the US over the last year. And you can see here that there's actually only 3 metros in the US which have gained jobs. And that makes sense because we're in a recession, right? There's lots of job losses everywhere. So only 3 out of 100 have gained jobs. You can see Knoxville, Tennessee, Chattanooga, Tennessee, and Ogden, Utah. And then we move into, job losses, these redder bars. And, the cities at the top have only lost, let's say, like 1% of their jobs. You could see moving down, we get to like 2%, 3-4%. The average in the US is around 5%. You can see Hartford's there at 5%. And that's a great comparison because Hartford is pretty close to Boston and New England. And so Hartford's lost 5% of its jobs year over year. That's close to the US average. Where is Boston on this list? Well, we still have to keep scrolling down to find Boston, all the way down, all the way down, all the way down. Here we are, number 97 out of 100. Boston has lost 10% of its jobs year over year. That's really bad. That's double the US average, and that's 10 times the cities towards the top, which have only lost 100% of its jobs. So think about that for a second. So for every one person that's lost their job in Salt Lake City, there's been 10 people that have lost their job in Boston. And it doesn't take a rocket scientist to figure out that that's going to impact real estate values. If 10% of the workforce is gone, either like unemployed or they've left the city to go someplace else, that's going to decrease the demand for real estate. And that's a situation that I don't think has really been sussed out yet in the market. I don't think the impact of those job losses has really been felt yet in the real estate market. So that's something to be concerned about if you're buying real estate in Boston right now. Of course, that doesn't mean you should not buy, right? As we said a second ago, there's no new supply in Boston, so you don't need to worry about like a massive decline in values. If you're a real estate investor or you're a home buyer just looking to buy a home right now, you should still do that, but you just need to be smarter about where you're going to invest in the city. Because if the area as a whole is kind of struggling a little bit, you can't rely on the fact that just like, oh, the market is just going like crazy, so I can just buy anywhere and I feel like I'm going to get appreciation. You have to be a little smarter about where you put your money from a location perspective. All right, so on this map, we're looking at all the different zip codes in the Boston metro area. And you can see the Boston metro area is like pretty big. It goes kind of from here where the center of Boston is all the way down to like Plymouth and Southern Mass, and then all the way up through like Southern New Hampshire. So there's a lot of different zip codes going on, but we're going to focus kind of more towards like the center of the Boston urban area. And the coloring scheme here is basically so that the greener the cell in the zip code looks, the more expensive home values are. So for instance, in 02493 in Middlesex County has an average home value of 1.5 million in November 2020. You go a little further south here, kind of to Wellesley, 02481, average home value of 1.6 million. So these suburbs here, Weston, Wellesley, Newton, this is where like the real high-priced homes are. The real money is in Boston. If you guys are enjoying the data presented in this video, please make sure to hit subscribe down below and to leave a like or a comment. I also provide coaching services to people one-on-one who want to learn more about how to use this data to make better real estate decisions. So please also reach out to me regarding that. All right, let's get back to the video. Dorchester, they both have average home values over $1 million. You go out to Concord, Lincoln, they're close to $1 million as well. Then if you scroll further into kind of like the center of Boston here, you also see some really high values. So 02116, this is actually the zip code I used to work in when I lived in Boston, has an average home value of $1.2 million. Crazy. 02111 in Chinatown, 970,000. 02118 in the South End, 910,000. 02210 in the Seaport, 1.2 million. So those prices are kind of wild. I mean, you're talking the western suburbs of Boston, we're talking like $1.5 million. The average, that's the average price for a home. I mean, there's homes in that neighborhood of like 5, 6, 7 million. And then, you have $1 million kind of in the Back Bay and the South End and the Seaport. And that's $1 million not for a home. That's $1 million for a condo that's maybe like 1,200 square feet. So that's really expensive. And the trend we've seen in a lot of these videos I've done so far, and it's pretty universal in almost every market, is that the more expensive places are, the less they grow. And that might sound a little funny to some people because there's kind of this weird conventional wisdom in real estate that like the best AAA location is somehow like the growth and the best protection of capital and value. That couldn't be further from the truth. If you look at the data, it says pretty clearly that the more expensive places are, whether they be an individual home or whether they be like a zip code, the more expensive places are, the less they grow into the future. Now we can see the impact of these high values if we look at the growth rates over the last 5 years in Boston. All right, so now on this map, instead of looking at the total value, we're looking at the growth in value in terms of how these cells are shaded. So the greener the cell looks, the higher the growth rate in value. So we see up here, 02149 in Everett has increased its value by plus 52% over the last 5 years. That's basically 10% a year. That's really strong growth. You go up a little further, 02148 in Malden has increased its value by plus 45% in the last 5 years. But if we now head back down to these more expensive zips downtown, we're seeing much lower growth. So back to 02116 in Back Bay, plus 18% over the last 5 years. That's just way lower than the growth that we just looked at in a place like Malden. If you go to 02210 in Seaport, plus 21%. If you go to Chinatown, plus 11%. South End, plus 20%. So you're really underperforming the broader market in these expensive zip codes. The same holds true if we go out west back to the expensive suburbs. Weston, 02493 has seen 6% appreciation over the last 5 years. That's terrible. That's basically 1% a year below inflation. 02418 in Wellesley has seen plus 14%. 01778 in Wayland has seen plus 11%. So there's really the situation going on where the highest price zips in Boston have really struggled over the last 5 years. So the reason I'm harping on this affordability thing so much is because I think the expensive zips are going to continue to struggle over the next 5 years. I mean, what are we seeing right now with COVID and work from home? We're seeing basically a decoupling of demand in urban centers where people are realizing like, oh, I don't need to be right next to my job. I can live further out and maybe I could just completely work from home, or maybe I could just come into the office twice a week. So I don't need to live in Back Bay anymore. I don't need to live in Seaport anymore. I can kind of go further out. But let's just start to think about now, where do we think is going to do the best over the next 5 years, right? What are the places where you have striking distance to the city, you have public transportation, but you get more space and you get more affordability? I think the neighborhoods that hit those criteria, those are going to be the ones where if you're looking to buy a home in Boston and you really care about growth and the financial aspect of it, or if you're looking to buy an investment property and you're looking to lock in appreciation, you're going to want to target these neighborhoods in particular for growth over the next 5 years. All right, so what I did now was I filtered out any zip code with an average home value above 500,000. So anything above 500,000, we're out. We're saying that's too expensive. And then I also filtered out any zip code that had real estate appreciation below 40% over the last 5 years. So we want areas that are affordable but high growth, and we're left with these zip codes. So these are kind of the core zip codes where we think Boston is going to do the best over the next 5 years, let's say. Starting here at the bottom, we have 02301 in Plymouth County. This is in Brockton. So we've seen average values increase by plus 49% over the last 5 years, but the average home value is still 362,000, which is reasonable. You kind of zoom in here, you can see that it's fairly dense suburban type neighborhoods, lots of homes kind of lined up next to each other. And then the zip code just to its right, 02302, almost a mirror image of sorts, plus 49% appreciation as well over the last 5 years. Average value is still only 346. So we're still dealing with a certain level of affordability. If we move further north, we can see here we're at 02126. And this is basically a zip code in Mattapan. And we've seen plus 48% appreciation here over the last 10 years. Values going from 324,000 to 480,000. 480, that would be expensive for an average value in pretty much any other city. It's not for Boston. It's affordable for Boston, and we're seeing good growth here. We also have a T-stop. We have the train somewhere around here that if you live in this zip code but still want to commute to Boston, you can take the train and you're good to go. Then kind of as we scroll north, notice how there's like no zip codes anywhere here in, let's say, downtown Boston or any of the rich suburbs or even in Somerville. We're saying there's no zip codes here that offer the combination of affordability and growth. We have to go up to 02150. This is in Chelsea, where values have increased by 45% over the last 5 years, 400,000 average value today. This is becoming a really popular, trendy neighborhood and one that I like a lot. You can see it's just like a stone's throw from where the action is in Boston, and values are still relatively affordable. Then you go west to Everett, where values have gone up by 52% over the last 5 years. They're currently 492,000. Everett's also seen a lot of growth and been in the news lately because Wynn opened a casino there about a little over a year ago. So lots of growth occurring in Everett, and still, again, relatively affordable, especially for how close you are, right, for commuting down into the city. Now, if we go further north, we have a trio of zip codes here, actually 4 different ones in Lynn. And so Lynn has this like history of being known as kind of a not so nice place. Lynn, city of sin. You know, you never come out the way you came in. Is kind of how the story goes. But that's not really the case anymore. Lynn has grown a lot over the last decade. And over the last 5 years, values have increased by 56% in 01902. They've increased by also 56% in 01905. We also see good growth in 0190. And we're also seeing good growth in 01901 and 01904. So these are zip codes that have seen like 45 to 55% appreciation over the last 5 years. Again, think about that. That's like 10% per year. And, you know, they're all basically around 400,000 or less in terms of their average value. Okay, everyone. So we tackled 2 key questions today. The first was, is Boston a safe place to invest in real estate? And the answer there is mixed. On one hand, Boston has a lot of supply constraints. There's not a lot of new homes. So that's, you know, good for values in the long run. But on the other hand, it's lost a lot of jobs. A lot of jobs in 2020. And that's a bad sign for the real estate market to move forward. So kind of the combination of those factors makes Boston a market that will probably underperform the US average over the next 5 years in terms of real estate growth. As a result, you care a lot more now from a financial perspective about where you're buying in Boston. You know, we looked at the data and we showed how all the high-priced zip codes in Boston with average values of $1 million or higher, those are really underperforming in the last 5 years. And they're probably going to continue to underperform because they're so damn expensive and people don't want to be like close to the city and cramped anymore. They want, you know, more space. They want more value. And for those reasons, you know, zip codes in places like Brockton and Mattapan and Chelsea and Everett have been doing really well the last 5 years. They're probably going to continue to do well over the next 5 years. I started ReVenture Consulting to help home buyers and commercial real estate investors make better decisions about where they're going to buy real estate. If you like the data presented in this video, please make sure to hit like and to leave a comment, as well as to subscribe to the channel. Additionally, I offer coaching services to people who want to make better real estate investment decisions. After all, buying a home or buying an investment property, those are the biggest financial decisions that you're going to make in your life. You might as well do it with data on your side. So I offer coaching services to people to help with that. So again, please reach out to me if you're interested, www.reventureconsulting.com. And until next time, this is Nick signing off.